Hello from San Francisco and welcome to Crossing Borders with Nathan Lustig, where I have conversations with entrepreneurs doing business across borders and the people who support them, with a focus on those with some connection to Latin America. This episode is brought to you by latamlist.com. If you like this podcast, you'll enjoy LatamList's daily tech news reporting. One more personal plug before we get started. Crossing Borders, a venture capitalist guide to doing business in Latin America, is out. I took my experience living and working in LATAM for the past 8 years and paired it with excerpts from Crossing Borders conversations from more than 30 entrepreneurs. You can buy it on Amazon today. My guest today is Jackie Hyland, one of the leaders in debt financing and venture debt for startups in Latin America. Originally from Houston, Jackie moved to Latin America to study, then worked with a nonprofit promoting entrepreneurship before moving into the investment world, where she worked both with startups and in real estate, working at Angel Ventures, a LATAM VC fund, and Accion, an impact fund based in Washington, D.C., where she worked with top LATAM startups like Clip and Confio. Later, she was the director of Silicon Valley Bank for Latin America, where she helped more than 400 startups get access to banking services in the U.S. We talk about financial services, financial inclusion, venture debt, and other products that startups in LATAM need and currently don't have good access to. After listening to the podcast, you should have a better idea of how debt financing works, especially in LATAM. I hope you enjoy this episode of Crossing Borders with my guest, Jackie Hyland. Hey, Jackie, welcome to the podcast. Thanks for being willing to do it.
Hey, Nathan. Sure. Happy to be here.
Yeah, this is going to be fun. So where are you in the world today?
Today, I'm in Los Angeles, California.
And what are you working on or thinking about most these days in relation to tech?
Yeah, I think lately what's been really top of mind is thinking about alternative ways of financing for tech companies, principally in Latin America, obviously in the world as well. But just given some of my experience thinking about how are some of these tools in the US, Europe, even parts of Asia being used and to finance really great ideas, and how can those tools be applied to entrepreneurs so that they can build bigger, better businesses and have more impact?
And what are some of those broad sets of tools that maybe entrepreneurs aren't as familiar with? Because they probably know about VC and maybe going to the bank for a bank loan. But what are some of the other tools in between that you think might be interesting for LATAM?
Yeah, Latin America's been interesting. Venture capital is still relatively new, but has been around in the tech scene and I think become pretty prominent way of financing as flexible capital. And I think obviously makes a lot of sense. Equity is very flexible and long term. But now that the market has matured a bit, and I know and probably some people, but crossing the $1 billion mark and VC raised, there's other tools that just really haven't been accessible to startups in Latin America through debt financing, whether that's portfolio financing for fintech or asset-backed lending. Some of the fintechs that are actually providing this to small businesses, they themselves haven't been able to access it because they've sort of come across the same roadblocks with banks. So it's just how can you get working capital that helps non-dilute, not to dilute the founders or some of the founding members, but also can get the company to a really interesting growth phase where, you might not even need subsequent really big rounds of venture capital and can do really well sort of as they are. So there's a variety of things within sort of a venture debt and just debt category that entrepreneurs can use. And I've just been thinking a lot about that, what exists and what would make sense for Latin America.
So we're going to dive into the nitty gritty of debt and venture debt just in a little bit here, but I want to jump back into you and your background and how you got to be interested both in debt and into Latin America. So where are you from originally?
I grew up in Houston, Texas. So southern U.S., not too far from Mexico.
And did you always know that you wanted to be involved in Latin America and in tech, or was that something that came later?
It's sort of, I guess I've always wanted to be someone who would explore internationally and learn about new cultures, new ideas. And when I first went to live in Latin America, it was sort of a kind of my first gateway to the rest of the world. And I started learning Spanish and really enjoyed the aspects of learning a new language and getting to know new people. And it just kind of stuck. I really ended up loving living there and the culture and getting more involved in what was happening in the region. And then tech and entrepreneurship sort of bubbled up on me. I actually started my career working for a nonprofit, and we were working with smallholder farmers in rural parts of Panama. And some of the workshops and things that we did when we worked with these groups of people, it was really fascinating because, the idea around entrepreneurship is simply solving problems. And it was just so obvious to me that local communities and local people, locals know kind of how to fix what they need, and the way that they can do that is, through entrepreneurship. So I started getting really interested in that idea of just pretty much how do we solve problems? How do we solve real problems for people, living in big urban centers, living in poverty, living in rural areas, living, facing different changes in the world. So I sort of threw myself into the entrepreneurship scene, feeling like I kind of just want to figure out how we can solve these issues.
What was the biggest thing you learned working at that nonprofit?
I think I felt fairly lucky. I had a lot of autonomy, so it was a little bit more personal on the learnings. But so I moved there in 2009, which wasn't the best year to sort of have, be looking for a job in the US. But I was given a lot of responsibility really early on. And also through getting into entrepreneurship, saw a lot of, if you care about an idea and you want to see it happen, you can make it happen. I got some money from, got some investment and sort of money from the US Embassy to start a women's mentoring program, able to start a lot of different projects with friends. And just, I guess it was sort of like very early on in my career, sort of see like, you can make an idea happen if you have it. And that was really empowering for me.
What was the mentoring program and why was it important?
Yeah, so it was essentially connected women in more sort of secondary cities, rural cities, to Panama City urban center, because there's a lot of economic growth happening. And so we're figuring out, myself and ended up connecting with Vital Voices, a nonprofit based in DC, to figure out how can we connect these nodes of women that are doing really interesting things in their communities, and build sort of a support network around that. So with some financing from a variety of different donors, really started this program that then was, passed off to Vital Voices, and still being run today, and not just for women in business, but also women thinking about running for office, and sort of these areas where there was a bit of underrepresentation in for women.
So for people who maybe aren't as familiar with LATAM, why is it important or even potentially more important to get women, especially in rural areas or in cities, into the either business or political process?
Yeah, I think something I've reflected about quite a bit, especially in myself and in my role in seeing and supporting other women and creating these networks of support. I think the higher, the great thing is there's a lot more data now than there was when I kind of started about 10 years ago, but that diversity in general is just so good for business, and it's great for the long-term health of a project or a business. So, and not only that, sort of just creating more economic opportunity for people in a country, to be able to provide more and then invest back in their families. Women are clear examples of some of the best investors, and sort of back into their communities, back into their families. So just as in my opinion, sort of net positive with the numbers, but also I think personally for me, thinking about future generations of women, thinking about, my daughters and the daughters of my friends, having just general more opportunity to be able to do more things, and achieve any goal that they have.
So speaking of investment, when did you jump to the investment side?
So I jumped to the investment side when I moved to Mexico. I applied for a business Fulbright, which is a pretty unique program. It's the only Fulbright that is focused explicitly on businesses, studying as a part-time MBA. And so I applied for that, knowing that I was really into entrepreneurship, but wanted to get a little bit deeper on some of the concepts and technical aspects of finance and starting a business. So I got that grant in 2012 and worked for Angel Ventures Mexico as an analyst there, looking at early days, looking at portfolio, looking at angel investment in Mexico, and getting and taking business courses in the evening.
So 2012 was fairly early in the LATAM and Mexican ecosystem. What was it like being on the ground in 2012 Mexico?
Yeah, 2012 felt like a fun year. It was also when Peña Nieto had just sort of taken the presidency, and there was a lot of hype around the reforms that he wanted to do that would, kind of set up certain parts of the economy really well. Angel Ventures, which is a couple years old, some of the funds were just a couple years old. Them was sort of this newer idea. So there was which for people who don't know is the Instituto del Emprendedor. There's a lot of really cool things happening, and I was able to connect with so many people who I'd say now are really, pillars in the Mexican ecosystem. And so I just love being a part of that. There is so much energy, so much excitement, and just a lot of hype around, in a good way, around what can we solve, what things can happen with this sort of new platform and using technology in Mexico. So it was really, really fun.
And fast forwarding to today in the Mexico ecosystem, what do you think are some of the biggest things that have changed from 2012 till now?
It's a great question. There are, obviously the funds are now going on to fund two, fund three. It's been super exciting to see funds that I met when they were first fundraising now having success and being able to raise bigger checks, and also being able to access public funding through different vehicles that were set up. So that's been really, really awesome to see. And then they're also second and third time entrepreneurs. So just having those cycles of people starting companies and them not working out, or they are doing well and getting acquired and moving on to something next. You're seeing a lot of those cycles and sort of pay it forward take place that I think you've seen sort of in a little bit more developed ecosystems in the US and Europe. So I think those two things have been the most exciting sort of progress that's happened. And yeah, in just sort of 7 years. It's been awesome.
And what did you do after Angel Ventures?
After Angel Ventures, I worked for a asset management firm in Mexico focused on rental real estate properties. So it was also super fascinating thinking about urbanism, but wanted to understand sort of another alternative asset class, and then moved back to the US and started working at Axion Venture Lab.
And what was it like transitioning from real estate back into tech?
Yeah, it was interesting. I mean, real estate was still really fascinating because at the time, even though it, I guess in some parts of the world was considered more of a traditional asset class, and it was still very alternative. So I was really fascinated by this idea of what do investors think of as alternative assets, and investing in them and looking for a fixed income type return or looking for this passive income type. So it was really interesting because when I was at Angel Ventures, there was a lot of talk about how it's hard people to understand angel investing because they only wanted to do real estate. So I kind of wanted to understand the dynamics of what investors were thinking about and why, and how, if there was crossover between what technology looked like and what that looked like. And so there was actually in the conversation of just investing in Latin America in general, it's very interesting to understand the sort of the traditional investor, but who was looking for alternative, and why they were saying no to tech. But yeah, high level transitioning back was really fascinating. I was able to jump into more of the fintech world, but also get back into earlier stage, less sort of building buildings and more thinking about how do you build software platforms.
So tell me about Axion. What is it and why is it important?
Yeah, so Axion I met through friends, and given my start in sort of the nonprofit world, had always been very interested in impact, and so, but they're impact investors focused on financial inclusion. Traditionally, had looked in the past at microfinance institutions and been the biggest backers of some of the most impactful institutions around the world. And as I started to get to know them and what they're looking for, I joined as an analyst just to pretty much support deals across the world, and was very excited about that. And then shortly after was able to sort of take the lead on what was happening in Latin America. And so it's really great. I felt like I was able to combine what I did in the nonprofit world then with some of my finance and investing experience as an analyst from the sidelines in Mexico, and sort of combine those two worlds into one role that was really, really interesting. So I really enjoyed it.
What were some of the most interesting companies that you saw or worked with while you were there?
Yeah, I mean, I loved working with all of my companies. With 7 in my portfolio at the time, but I think it was so fascinating for me to see companies like Confio, which was one of our investments, and Clip. They're sort of in the fintech space, see it take off and see how fast they could grow because the need was just so obvious. I mean, it seemed obvious at the time when you look at, obviously with entrepreneurs and you talk through things, and then as they launched, just see how the market responded so immediately because the banking services, the customer experience for both small businesses and individuals was just so terrible. It's almost like anything that was just slightly better could do well, but they were really focused on being 10x better. So those two were really fun to work with. There's another company called Tienda Pago that I worked with quite a bit, and they were thinking about how to also work with the mobile wallets and how to make that work. So a lot of aspects around, in particular around lending and payments that were just solving really, really big problems and huge headaches for people all in the region. So it was all super fun.
So a lot of those companies solve huge problems that people in Latin America understand really well. But when I talk to people in the US, they generally don't understand how bad the services are. Do you have a couple of examples of things that you saw or problems that some of those companies were solving that you can share with people that maybe aren't as familiar with LATAM?
Yeah, yeah. I think so. In general, the banking experience for lower income groups of people is just it's just really, really difficult. And so even going to a bank, how people are treated, discrimination around how one looks, if they look like they have money or they don't look like they have money. So just there's a general fear around transacting, which makes people not want to be part of a system. So it's also really interesting to think about. There are a lot of really, we'd call kind of the informality of Latin America, where individuals think about they have full-blown businesses that operate off any sort of payment system, off banking, and people are kind of have talked about, well, oh, it's because they don't have access, or because they live in this part, they live in rural areas, or because of their income. And also what we saw, though, in many cases, is these people run huge businesses, but they just don't want to be a part of a system that treats them poorly, that treats them like they, without any, without respect, without can't move as fast as cash. So cash kind of maintained its position as king in a lot of ways because it was the best user experience. And so, and I'm sure, some people, when I lived in Mexico, I waited in line a lot for banking services. I guess I did waste hours trying to send money to the US. Think about Mexico in particular and Central America. Remittances is such a huge part of many people's lives, as there's a lot of migration between a variety of countries. And just that waiting in line, that worrying about if you use cash, like if you're taking cash home and if that's your opportunity cost, if you can lose that. So there's just so many points of entry where people, especially with low resources, had a lot to lose if the system didn't work well for them. So when we were working in a lot of these individuals who are, can't have that opportunity cost, also run their own businesses, or have a small business, either a corner shop or a small restaurant, and so they also similarly just aren't able to put their business make it formal and sort of risk losing capital or not be able to get money out or things like that. So thinking about those true pain points and making products around that experience, and was really fascinating because technology was in an interesting way really humanizing for people who've been treated so poorly for so long.
I mean, you're definitely spot on that you wasted time in line. That's
Yeah.
that's the worst part about Latin America, honestly.
Yeah.
So after Accion, you went to Silicon Valley Bank. What did you do there?
Yeah. So at Silicon Valley Bank, I was leading director of Latin America, which meant that Silicon Valley Bank doesn't have an office in the region, but because many companies raise money in dollars or have a structure that they have a holding company in the U.S. or elsewhere, they oftentimes need a U.S. banking partner. And sometimes when not always, but if you don't have operations in the US, other banks kind of like, oh, we don't really get what you're doing. You've raised money. That's great, but that's also weird. And we're not sure where it's going. So Silicon Valley Bank kind of jumped up and said, hey, we know you're investors. We get what you're doing. We've seen, you work at other companies previously or whatnot. So open bank accounts and provided banking services for these technology companies in Latin America. So my role is to support and open the platform, which from bank accounts all the way up to debt, for about 400 clients throughout the region, including VC funds. So VC funds, similarly, many of them in the region are dollar denominated. So that means they raise money in dollars, and then they deploy throughout the region whatever currency they see makes most sense. And so managing those relationships and providing similar services from bank accounts all the way up to capital call lines of credit to funds. So it was just really fun to branch out a bit and see not only fintech, but be part of still the financial services industry and see a lot more industries, see how what companies were starting, and also just myself trying to be helpful in giving thoughts or feedback or whatever sort of my clients needed around where to raise money, what they should be thinking about in terms of the fundraise process, which they should be thinking about post fundraise process. It just felt a little bit like I went from a 7 company portfolio to 400, and it was really, really fun.
Yeah, just the simple act of opening a bank account for a lot of the Latin American companies is super important. I think a decent chunk of our portfolio is at Silicon Valley Bank because there's so many places that other banks that will say, okay, you just opened an account, you got a $500,000 wire, and now you wired 300 of it to Latin America. Sorry, we think this is weird. We're shutting your account.
Yeah,
We're sending you a check. Like that's happened multiple times with our portfolio companies, and it's super frustrating.
Yeah, it can be super frustrating, and it sounds so simple, just a bank account, but it was really it does feel like such a huge headache when you need to get operations up and running. I mean, if you can't have a bank account as a tech company, yeah, how are you going to sort of get things going? Or are you going to spend so much time in those early months just trying to figure out how to move money around when that time and energy could be spent building a business and moving quickly? So I totally agree.
We had a company that raised money in the US and they couldn't open the bank account without flying personally, which is fine. But I went because I was on the board and signed for them to open the account and then put them on the account when they came to the US. And so I had to go in person. Then a month later, once they sent that wire to LATAM, the bank was unhappy and they just shut it down. They sent a check to the address, which is my address in Wisconsin, which is my parents' house. So they got a $400,000 check in the mail from a bank. So like that's the type of stuff that we're dealing with in LATAM that I think people maybe in the US don't understand.
Yeah. Oh my gosh. Yeah. It's so crazy. I mean, I felt lucky because it was at Silicon Valley Bank in a lot of ways was sort of very easy to start conversation because, well, some people were like, oh, well, it's just a bank account. I think in Latin America, people were like, oh my gosh, this is the number one thing we need. So it was good to sort of start relationships with a lot of folks, just really making their lives really easy. So yeah, it was really fun.
After opening an account for a company, what were some of the other services that you saw were important for LATAM companies at Silicon Valley Bank?
Yeah, for a lot of companies, the next kind of conversation was how do we move money, right? So to your point, how do we sort of once we raise our financing, we need to send money to Mexico, Brazil, Argentina, Chile, wherever. And how do we do that at the lowest fees possible? And if we don't do it, what are our options? And sort of thinking through with a lot of the CFOs who were the main group sort of we were talking to, what is a good strategy around keeping capital in a certain currency, either for ease of operations, for trying to think about maybe taking advantage of some local opportunities. So Brazil and traditionally high interest rates, so if you can move the money there, would that make sense? So working through a lot of those, okay, here's the capital we have, what to do with it. And so we did offer a lot of foreign exchange advice and foreign exchange hedging, and thinking about, especially if there was portfolios around fintech, a lot about thinking about money markets and keeping money and savings in dollars, all with the kind of goal of not trying to invest your investors' money, but how can you preserve it and sort of maintain the highest value of it so that the operation, the company can have as long of runway as possible to kind of get where it needs to go. And then also to venture debt. So thinking about debt, so like letters of credit, venture debt, asset-backed lending. I'm thinking about those options as well from knowing that, okay, you're our bank, you've seen operations. We also, in particular for companies that were thinking about going global very quickly, it was very easy to have that conversation. It was a little bit harder if it was just Latin America, just because Silicon Valley Bank didn't have local offices in the region. But if if the company had very prominent investors in the US or had some US operation, there was openness to think about, okay, well, what could we potentially help with on the debt financing side? And so we kind of went that whole gamut around things.
So let's jump deeper into the debt. So at products that you're looking at today and why you think they're interesting. So what do you think is the most important product that Latin American tech companies should have access to that maybe they don't have access to today?
Oh my gosh, that's a great question. There's so many things, but
We can do top 3 or 5 too if there's a
yeah,
bunch of them.
yeah, I think for the financial products, starting with debt financing, it's top of mind for me. So that's definitely the first one that comes to mind. Just alternative ways of financing your company. Like I said earlier, equity is great because it's so flexible, and the investors who want to invest now are sort of first wave, very passionate about technology, and really truly want to be, almost as another team member and super involved. So there's definitely that around there, but as that grows as a founder, it just becomes more complicated to think about as you sell parts of your company off. How does the founder stay motivated and have enough sort of stake in the company to keep going? How do their employees feel like they have stake in the company to keep, working as hard as they are? And then also, can the company even get to a growth stage where they can break even, function on their own, have financial products, and then depend less on, okay, when's my next fundraise? Because as many people who might know about Latin America, the growth stage is still, there aren't a ton of players, and so you get to sort of you start Series C, you can get an A, possibly a B round, and then maybe even later if you start globalizing, going to different parts of the world. But by and large, if you're staying in the region, that there's not a ton of C or D level investment. So either the company has to get bought or has to be, has to go to break even and just sort of get there as fast as possible. There's nothing wrong with that. But at the same time, you think, well, if I had an injection of capital that was a little less flexible, but was, 3 to 5 years, I could get to break even. I could still become on this hockey stick trajectory, and be able to just grow as fast as, VC investors kind of want, but without having to worry about this big gap of funding that's coming, and more worry about operationalizing and getting to break even really, really fast. So, and that looks, I think what I'm really interested about and thinking is these tools that exist in the US, like venture debt, like leasing, like asset-backed financing, a lot of times, and those things exist in Latin America, but they exist for very traditional businesses. So I'm thinking about, okay, what exists in the markets now, and how can we apply those to the technology sector that is, while has been growing very rapidly the past 10, 15 years, is still sort of new on the radar for banks and traditional financial institutions. So that's been a huge one for me, and also making it very localized to Latin America. This is something I thought about a lot. Silicon Valley Bank was, okay, we have this suite of products, we have this debt that works in a lot of ways in the U.S., but how would this look and how would this work the best way it can for Latin America? So thinking through that and what works, I think, is a huge need. A second need, just also continues to be, it's going back to foreign exchange, is movement of money. Banks in Latin America are very expensive, and there's wonderful fintechs that are coming in and trying to bring down both APR rates, lending rates, and foreign exchange continues to be another one. Or any movement of money through countries is obviously it's part of being risky, and banks have to do diligence and figuring out what's happening. But for the sort of basic business individual, if you want to start a global company and you look really small from the get-go, you're still going to be charged like really exorbitant rates. So I think that's another huge issue. We saw just sort of how can you start a regional operation and make it so you don't sort of are just spending a large chunk of cash on moving money.
So digging a little bit deeper into venture debt, I think probably even most entrepreneurs in the US probably don't understand how it works. And I think when I first heard of venture debt with my second company, I basically thought it was just a higher interest loan.
Yeah.
So how does venture debt work, and why is it important for a startup?
Yeah, so traditionally venture debt has been a complement to venture capital. So usually in the US, traditionally happens is you raise a round of capital, and during that fundraising, you sort of go to a bank like Silicon Valley Bank or a venture debt fund, and you say, hey, I'd like to raise on top of this a debt facility and complement to. And that usually kind of becomes as a package around a venture capital round. And so then what companies usually do is they have that almost insurance plan in some ways, or that they don't have to draw on it immediately, you don't start using it immediately. So they start using their equity, and then they have this facility that they can use if they need to, finance operations or finance a part of their business that becomes really immediate. But they have the backing of the venture capitalists, and it's mostly between like a Series A, maybe even early A, and then a B or B to C. So with the intention of, okay, we're going to be able to get to a pretty big goal in the next year and a half or 18 to 24 months. And this extra capital is going to not only help our company get there, but it's going to help our company get there and achieve even bigger goals. So the idea is that you can get a loan that will help you sort of expand your valuation and grow it much faster between that A and B, so that everyone has less dilution in the following rounds, and you can sort of achieve bigger goals. And but there's always it's sort of been in between that A and B, and a little bit like, okay, it is still going to be very heavy, like integrated between a series of venture investments.
And one of the things that I've seen with some of the fintech companies that we've invested in, and then also talking to other entrepreneurs on the podcast, is that when they're lending, especially, you need money at the beginning to figure out if the product actually works. And there's a lot of entrepreneurs that end up having to use equity money to test that and just do it on their balance sheet. And one of the big holes that we've seen in the market is that there isn't anyone who's willing to, or very, very few people willing to actually put money to test some of these new lending algorithms or processes. Is that something that you think you might be interested in going forward?
Yeah. So, venture debt, I think it takes on a lot of different forms, but traditionally it's been around working capital. But there's also, and thinking of it just about debt for ventures, so sort of, I guess, picking it apart and sort of using the words for Latin America, portfolio lending for fintechs has been a huge issue as well. When I was at Axion, we were investing in equity, and I think a huge issue after we would put in the seed capital was, okay, we can continue to lend off equity, but it's very expensive for a business, and it's not sustainable in the long run. So how can we continue to grow, or their portfolios were growing really quickly and they wanted to not use as much equity because they also needed to still make hires and finance things. So there was a huge gap. And while there were sort of second tier lenders trying to lend to them or trying to figure it out, or even some development banks and whatnot, it still was very hard in the early stages for them to get any sort of portfolio capital if it wasn't equity, or if it wasn't maybe from a family and friend round, or from maybe a family office that was a little bit more familiar with doing fintech or financial portfolios. So that is also something that we've been thinking about quite a bit, given that a lot of the fintech groups and people I still know and CFOs, they spend a lot of time talking to people who want to give them capital, but they can do it quickly if it's above $35 million. So anything below that is kind of just not high enough for large institutions to get involved. And then there's other smaller ones that, haven't really reviewed or done diligence on a tech company before. So then it takes, 9 to sometimes 12 months for them to make a decision. And by that time, the CFO or the company, whoever is sort of like, we're an early stage tech company. We don't have a year to sort of go through your process and in some ways waste time. So thinking about how to lend to fintech companies in both an innovative, technology forward, technology first way is I think something really interesting to figure out, and it's still a huge need because there is the gap between $1 and about $20 million where there's just nobody thinking about that. And so I think there's a huge opportunity there.
Yeah, as Diego Caicedo from OmniBank puts it, startup years are like dog years. So 1 year waiting for a potential loan is like 7, and it's just not going to work.
Yeah, no, 100%. And it's not going to work. And the company could or could not be around by then. So being able to move quicker and use, there's so much technology out there. And the great thing is a lot of these companies are so, their platforms are so robust and so intricate that you can sort of really plug in and get data and information and analyze it fairly quickly if you sort of are able to set it up right. So excited to see how that plays out, because I think it's going to be really, it's a really cool opportunity.
So knowing what you know today about the ecosystem and debt and startups, going back to when you first started as an analyst, what advice would you give yourself?
Oh yeah, I think the advice that I would give myself is to, and I think about this even now, but to not be afraid to sort of jump in and start something on your own. I did something small in the nonprofit world, but kind of going back and thinking, okay, how do I get my hands dirty? And I think working in and working with and around the ecosystem is really great. And it's I got my hands dirty more on the financing side of things. I think for myself, and at that time, it's all about trying as much as possible. So I probably would have told myself to sort of jump in a little bit more into companies and getting my hands dirty and sort of being a part of a startup or being part of some of those companies, because I was a little bit sort of wanting to observe and see what's going on. And yeah, I think you learn by doing. I think there's so much. I've seen lots of people be like, oh, I want to learn, I want to study, and there's obviously a lot of value in doing market research and doing your homework. But a lot of it is about just trying things out and almost having a little bit more of the entrepreneurial mindset of try it and fail fast, and then try again. So I think I would have jumped into that mindset a little bit sooner.
Well, I'm excited to see you jumping in on the debt side and being one of the leading voices in debt for Latin America, because it's something that's definitely a big opportunity in the market and something that entrepreneurs need. So I'm really excited to see what you do with it.
Thanks, Nathan. Yeah, I'm really excited as well. I think it's a great moment to be thinking about it. And I've met so many people just in this conversation who also want to solve this issue and are really passionate about making it easier to build great products. It's funny, I used to at Silicon Valley Bank, or when I moved from sort of impact investing to Silicon Valley Bank, people were like, oh, you sort of left the impact world. And I was like, yeah, but not really, because all the companies I felt like I was working with, they weren't making an app to find the closest avocado toast. It's like, which is not a bad thing to make, but they were solving really big issues. And so I'm just super excited to keep thinking about this, about continue to fuel those ideas and be those big ideas that I think are truly transforming kind of economies throughout the whole region. So I'm also very excited.
Well, we're going to definitely have to do a round 2 in 9 months or so to hear more about what you're learning on the debt side. And thanks again for taking the time to do this today. It's been really interesting, and I think people are really going to get a lot out of understanding more on the debt side.
No problem. Yeah, it's excited to talk about it and keeping in the discussion and conversation with you and anyone who wants to.
Awesome.
Thanks again for listening to this episode of Crossing Borders with my guest, Jackie Hyland. I hope you enjoyed it. Remember to check out latamlist.com if you want daily LATAM tech news, and check out my book, Crossing Borders, which you can find on Amazon. If you like this podcast, please share it with a friend. It's the best way for people to learn about LATAM tech. Thanks to Angel and Sophia for helping produce this podcast, and thank you for listening. Have a great rest of your day.